So good evening, everyone, and welcome to the next Parsons Centre Law and Business Downtown webinar series. We've been doing these webinars since the start of the COVID pandemic back in 2020. And typically we do about a webinar a month. And one of the goals of this webinar program is actually to reach out to the general business community, to reach out to the legal profession and share some of the fantastic work that both our researchers are doing, but also researchers at some of Australia's other leading law schools. And tonight's program certainly fits that bill. So tonight's topic is central bank digital currencies as a potential response to the financial inclusion challenges of the Pacific. And our speaker for this evening is Dr. Anton Didenko. As you can see there from the slide, he's a senior lecturer in the Faculty of Law and Justice at UNSW Sydney. Now, Anton's got an interesting background for this topic. So he specialises in banking and finance law with a particular focus on fintech, redtech and cybersecurity. And prior to becoming an academic, he has had over a decade of experience as in-house counsel, both for major commercial banks in Europe and also working as a senior associate at a major law firm in the UK. He's also previously worked as head of legal support of international operations for various commercial banks and also as a research fellow at the British Institute of International and Comparative Law. He also specialises in the area of secured transactions law and transnational commercial law, and he's recently published a book which is a documentary history on the Cape Town Convention on International Interests in Mobile Equipment, which was published by Hart in 2021. And of course, that's been, for those of you who might have an interest in Australian insolvency law, we've had a major case go to the High Court looking at the operation of the Cape Town Convention and how that interacts with our voluntary administration regime. So that might be something that Anton perhaps will come back later this year and talk to us about. Anton's also the general editor of the Cape Town Convention Journal. Now, one of the features of this webinar series, if you've been attending some of our other webinars, is that where we have an academic keynote speaker, I always like to have a leading practitioner come along to provide some practical commentary and also to relate it to that business and legal practitioner audience. And I'm delighted this evening that we've got Urszula McCormack, who's a partner in cross-border finance and technology at King & Wood Mallesons, and she's both here in the Sydney office and also in the Hong Kong office. She's one of the world's leading regulatory and digital economy lawyers, and her practice focuses on emerging technologies. She advises global banks, payment institutions, large technology companies, exchanges, virtual asset issuers, and software developers on new products, cross-border transactions, compliance, and licensing. And she is a leading specialist who advises governments, multilaterals and regulators on building robust, enabling environments for digital payments, digital identity, financial crime controls, cross-border data flows, and innovation. So thanks very much to Anton and Urszula for joining us this evening. Just as a matter of housekeeping for attendees, if you do have any questions for our speakers this evening, if you wouldn't mind posting them in the Q&A function that you'll see on your Zoom toolbar there, and then there will be some time for question at the end of the presentation, so I'll field the questions at the end. So if you just post them in the Q&A function. And I'll now hand over to Anton. Thanks very much.
Thank you so much, Jason, for the introduction. Good evening, everybody. Thanks for joining us today, and I'm excited to see that Urszula has agreed to be the commentator today. Probably couldn't have asked for a more experienced, knowledgeable commentator, a practitioner in this space. I think today's topic, central bank digital currencies in the Pacific, is quite important because in recent months, even years, a lot of attention has been focused on the Chinese central bank digital currency. I think it was initially known as the DCEP, later as ECNY, or digital yuan, for a good reason, due to massive international implications of this project. So massive, in fact, that the US Fed published a discussion paper that examines the pros and cons of a potential US central bank digital currency. It was done in January 2022. And also the Australian Treasury is expected to lead a review of the viability of a retail central bank digital currency in Australia, jointly with the Reserve Bank of Australia, by the end of this year, I believe. And because of all these high-level, high-profile developments, it may be very easy to overlook what is happening in smaller economies that are also considering the opportunities presented by central bank digital currency, particularly in the area of financial inclusion. So let us now try to briefly consider whether and why Pacific Island countries, especially the smaller ones, may have a good reason to issue a central bank digital currency and what they stand to gain from it. So this is the outline of today's presentation. I will start by putting central bank digital currencies into the context of financial inclusion, some terminology first. Then I'll talk about, very briefly, financial inclusion challenges in the Pacific Island countries. And then the most important part of the session, perhaps, is that the discussion of CBDCs in the Pacific, opportunities, challenges associated with them, and also I'll try to give you my perspective on the main drivers, the factors that might actually push these countries to develop a CBDC and launch them, maybe on an individual or on a regional basis. I have a couple of case studies if we have the time, and then a couple of conclusions at the end. So first of all, what do we mean by central bank digital currency, or CBDC? I like the definition prepared by the Bank for International Settlements in conjunction with a number of leading central banks around the world, including the US Fed and the European Central Bank. It defines central bank digital currency as a digital payment instrument denominated in the national unit of account that is direct liability of the central bank. And I think it's very useful to keep this definition in mind for this session, given that the terminology is not always uniformly understood. And also, the purist in me says that the definition is helpful to distinguish an actual CBDC from other technology-enabled digital currencies, in particular so-called synthetic CBDCs. And in fact, a synthetic CBDC is a misnomer that refers to digital currency issued by a private party, such as a commercial bank, that is matched by central bank deposits. And in this structure, private parties, such as commercial banks, do not merely act as intermediaries between the central bank and the relevant end users. Instead, they actually issue their own liabilities as a medium of exchange, and that liability is backed by central bank issued assets, much like electronic money or stable coins, if you will, but with a different type of float or different type of stabilization asset to the hand. So as a result, in a so-called synthetic CBDC, end users do not have a direct claim against the central bank, even if the balances held by private issuers are fully backed by central bank balances. So currently, the level of international regulatory interest in CBDCs is definitely on the rise. It's confirmed by a number of surveys conducted by the Bank for International Settlements, which suggest that most central banks are in fact engaging in some sort of work involving CBDCs. Although, frankly, this work is in very different stages, from theoretical research to proofs of concept, to pilots, and to actual live, fully launched CBDC projects. And overall, almost 90% of central banks surveyed by the Bank for International Settlements apparently exploring the benefits and drawbacks of CBDCs, according to the international body. And in February this year, Kristalina Georgieva, IMF managing director, confirmed that around 100 countries are exploring CBDCs at one level or another, obviously at different levels. So the number of interested countries may sound really impressive, 100 jurisdictions, but in practice, this does not necessarily mean that we're going to see a lot of CBDCs going live soon. In fact, we observe very different approaches to CBDCs across jurisdictions. For example, advanced economies generally have much weaker motivation to launch a CBDC. They largely focus on things like payment safety and maybe ways of improving the efficiency of cross-border payments. And even for central banks actively involved in CBDC research, a CBDC can be seen as a solution waiting for a real problem to solve. For example, the Bank of Canada has for years, its researchers actually, have for years studied various design options for CBDCs as part of Project Jasper, some joint projects with other regulators. And after 4 years of research, in Canada, CBDC is still seen as a contingency measure. So CBDC is seen as a tool that can be implemented if there is a major economy-wide disruption of sorts, maybe a dramatic decline on the use of banknotes, maybe emergence of some kind of major global stablecoin like Libra or now Diem, that would replace the Canadian dollar as the main form of money used in the circulation. So that's when the Canadian dollar is threatened, and as well as the Canada's monetary sovereignty is threatened. In contrast, emerging market economies demonstrate a much higher interest in CBDC projects. So here, the need for change is greater and motivations are more varied, ranging from improving payments efficiency to financial inclusion. That's very important for us today. And because of this, actual CBDC implementation is probably a lot more likely in emerging economies. And in fact, according to the Bank for International Settlements, every central bank that has progressed to the development of a pilot CBDC project is an EME, emerging market economy institution. And finally, and this is a very interesting group for today's session, there are central banks that are not actively considering CBDCs, and these typically come from smaller jurisdictions which focus on their efforts on other issues that are deemed more pressing. So central banks in these countries are not persuaded they should be spending resources, money and time on CBDC projects because of the opportunity costs, essentially. And this would perhaps be the case if they were considering launching a CBDC with objectives that are not financial inclusion. For example, if they wanted to modernize the wholesale intrabank settlement processes, they may consider this, well, we should probably not do this and spend resources elsewhere. But connecting the discussion to financial inclusion, now there are several CBDC projects around the world that seek to facilitate financial inclusion. They do this by offering an alternative store of value through the CBDC or by increasing access to digital payments, and therefore providing gateway to wider access to financial services. Some of these projects actually identify financial inclusion as the principal objective of the launch of a CBDC. One such project is eNaira, Nigeria's CBDC that was launched at the end of 2021. Another example, also from Africa, comes from Ghana. Only several weeks ago, I think in mid-March this year, the Bank of Ghana published a design paper of the digital cedi, eCedi. And for the purposes of today's discussion, there's one important feature there. It's its focus on offline payments. There's an overall focus on financial inclusion in the document, but a lot of attention there is paid on the ability to serve rural areas where there may be very limited internet access. And so this is something maybe to look out for in the future. But although African projects are very interesting, I think it's especially useful in the context of the Pacific to consider other CBDC projects launched by island nations. A good example comes from the Bahamas, and that's the Bahamian Sand Dollar, not only because of its focus on financial inclusion, but because of the considerable similarity of underlying problems with the Pacific Island countries. In the Bahamas, there are pockets of population that are excluded from financial services because it's not profitable for commercial banks to operate there. And approximately 20% of the adult population is estimated to have no bank account there. And geography further makes the problem worse, since the Bahamas consists of, I think, around 700 islands, which are very costly to serve. Another example is the Dcash project of the Eastern Caribbean Central Bank, or the ECCB, which seeks to deal with similar issues. There's also a number of island nations in the European Eastern Caribbean Currency Union, and it was very difficult for financial institutions to develop economies of scale there. And foreign banks have increasingly withdrawn from the region, citing low profitability. And the result, obviously, is very low financial inclusion. So my favorite slide, lots of numbers. Everybody likes numbers. Financial inclusion in the Pacific, among Pacific Island nations. Cash is still the preferred payment method for most retail transactions, followed by paper checks. There's heavy reliance on physical cash, which makes payments complicated because it requires the payer to travel to the financial center, which is costly, time-consuming, and so the population is dispersed. There are electronic money service providers that have been launched in the Pacific. The technology has grown quickly in Fiji, with more than 1 million mobile money transactions reported in 2017, accounting for around 1% of GDP. It's taken off there. Tonga and Samoa have demonstrated higher usage of e-money transactions with higher percentage of GDP by value. Cross-border payments remain a very important source of income in Pacific Island countries, on average, amounting to around 10% of GDP. That's due to high immigration rates and seasonal employment. The percentage, I think, it's much higher in Tonga and Samoa. Again, I think in Tonga, it's around 30% of GDP, and in Samoa, around 15% of GDP. And COVID-19 pandemic has led to a massive spike in cross-border remittances to Pacific Island countries, with transfers to countries like Fiji and Samoa increasing by 400%, coming with high fees from the relevant institutions servicing these transfers. But that's one of the problems probably central bank digital currencies may help to address. And also there is the major problem of unregistered population, which remains a major obstacle towards financial inclusion. It's estimated that around 80% of the population of PNG, Papua New Guinea, lacks any clear form of identification. And there was an ID box project implementing blockchain and biometrics that sought to deal with the problem to some extent. And also the government of Samoa in 2020 sought technical assistance to establish a countrywide identity management system over 3 years. So a lot of issues associated with financial inclusion. So to summarize, so here are the main 4 financial inclusion challenges in the Pacific. The geography is a big problem. Highly varied access to basic infrastructure such as the electricity and the internet. More than 8 million people in Pacific Island countries have no electricity supply. Access to electricity is lowest in high population countries, especially PNG. And the level of internet penetration is largely similar to lower middle income countries, but remains low in absolute terms, around roughly 30%. Now, there was back in 2016, now the numbers are slightly higher, but still there are substantial differences in levels of internet access, at around 11% in the PNG, rising to about 50% in Fiji and 57% in Nauru. But that's sort of the highest it goes. And this directly impacts financial inclusion for several reasons: lack of commercial viability for suppliers, high usage costs, and even psychological barriers to saving or accessing financial infrastructure by the poor or technologically illiterate. Mobile phone subscriptions are also lagging. Numbers are very low in some countries, say around 21% in the Federated States of Micronesia and the Marshall Islands, about 28%, but rising to more than 100% in Fiji and Palau. But while some of the numbers seem high, many Pacific Island countries predominantly use the older, lower capacity 2G connectivity compared to 3G, 4G, 5G, those high bandwidth options. This creates obvious issues. But despite these challenges, some Pacific Island countries have taken important steps to improve the level of internet penetration over the years. With the Coral Sea Cable project, the Palau submarine cable system project. But unfortunately, those connectivity projects are negatively impacted by political context, like competing major economies in the region. A good example is probably the East Micronesia cable system designed to improve communications in Nauru, Kiribati, and the Federated States of Micronesia. The project reached a stalemate when the United States came on board and led to a halt of the project because of a Chinese company participating in the bidding process for the project led by the World Bank. So lots of issues. And if we try and look at what a central bank digital currency could potentially bring to the table, then here are some of the potential opportunities. There are a lot of them. I won't try to cover them all, but I'll try to touch upon some of them. Well, first of all, the obvious one, in countries where the maintenance of a high volume of low value payments in other financial services is unsustainable or commercially unattractive for commercial banks or electronic money operators, a CBDC can provide a government authorized solution for storing value, making payments. That's obvious. And the CBDC can be useful for channeling economic stimulus payments, particularly in types of crisis. This is very important for the Pacific Island countries, which are most vulnerable to the effects of climate change and natural disasters. According to World Risk Report 2019, many of the Pacific Island countries are in the top 20 most at-risk states in the world. Vanuatu has the highest disaster risk worldwide, and Tonga, Solomon Islands, and Papua New Guinea are on 3rd, 4th, and 6th, I believe, on that anti-rating, I would say. And also Fiji and Timor-Leste are also on the top 20. Another potential benefit is that the CBDC can really facilitate, bring out digitization of the entire economy on different levels. It could facilitate the development of a robust nationwide digital ID platforms, and to bring out national digital ID platforms because of that. And it can foster interoperability with the financial services sector by linking different payment systems as well. Another possible advantage of a CBDC is that it can either compete or strengthen electronic money platforms. And it has very important advantages over payment instruments that are typically used to promote financial inclusion, such as e-money. That's because the CBDC does not require an intermediary, and so it can be used to safely store the amount of float, which typically takes the form of deposits in commercial bank accounts. And compared to deposits in commercial bank accounts, CBDC balances are insolvency remote, and so this can facilitate the use of e-money, keep them safer, or even maybe replace them completely, their systems completely. And CBDC can hold the potential to address some of the recurring challenges of cross-border payments. There was a G20 initiated reform a couple of years ago, and CBDCs can be implemented in different ways. And a CBDC can be used to make payments to and from another currency area, or they may facilitate interoperability with other domestic CBDC platforms via bridges or whatever other technology may be invented in the future. And there are also different options that can indirectly impact financial inclusion, such as the options that facilitate the monetary tools available to a country. But these are indirect tools. I'd rather focus on things that directly impact financial inclusion. As for the challenges, now these are substantial too, probably even more substantial. Well, first of all, effective implementation of any CBDC will depend on the availability of required infrastructure, electricity, internet. I mentioned those as major issues in the region. And on top of this, as with any type of currency, the level of implementation of a CBDC will ultimately depend on the level of trust and demand and understanding among the end users. And in some Pacific Island countries, the overwhelming majority, as I said, prefers cash. I'll give you another example. In 2020, there was a first ever comprehensive financial services market survey in Timor-Leste, which revealed that 91% of respondents preferred cash to digital alternatives, any digital alternatives. And the main reasons for the rejection of digital money and electronic money was the lack of understanding of the concept of e-money in the first place. This taken into consideration, I think we shouldn't be surprised that technological and financial literacy is going to be a major obstacle, because with CBDCs, things are getting a lot more complicated. For example, how would a person who does not really understand the concept of e-money differentiate between a fully decentralized cryptocurrency like Bitcoin, centralized stablecoin pegged to official currency such as a Tether, maybe even Diem, Facebook's Diem, or synthetic CBDC that I mentioned initially? So that's a big obstacle. The third big problem is really the lack of regulatory expertise. It will be crucial. Regulators, now I understand and appreciate that for individual users, a CBDC can potentially be a black box, and it's probably fine. We don't really need to understand how everything works on a technological level, but for the regulator, a CBDC should probably not be a black box in the first place. And so it's very likely that outsourcing or development of CBDC will raise a lot of issues. And outsourcing is probably the way to go in case of a lack of domestic expertise. And there will be a case study on Marshall Islands in a couple of minutes, which shows what issues can arise. And also should remember that software development contracts typically limit the developer's liability substantially. In scholarship, in legal scholarship, it's known as the unusual legal cocoon of software developers. Software can be developed on as is basis with disclaimed liabilities and so on. Unlimited liability will be kept. Whereas for the central bank launching a CBDC, the potential implications, reputational risks, are limitless. And also, CBDC will likely facilitate cybersecurity risks for all stakeholders, especially if we consider the assume breach attitude, which is typical for cybersecurity regulation. It's assumed that everybody will breach at some point. It's just a matter of time. It's not if, but when. And also, obviously, competition issues, which are going to be very strong, I suspect, depending on, of course, on the size and sophistication of economy, but mostly competition with e-money providers and commercial banks. I alluded to previously a couple of arguments that I think might push, a couple of factors that might push central banks in the Pacific towards launching a CBDC. And I think the majority of those factors are actually external to the relevant countries themselves, to the central banks themselves. Well, first, a domestic original CBDC is likely to be most effective as a response to the problem of digital dollarization. And I don't mean here official currencies, but digital dollarization via a dominant CBDC issued by a major economy. Think China, think maybe some other country, which might end up effectively displacing the domestic currency in Pacific Island countries. And compared to cash dollarization, this digital dollarization via other CBDCs can be particularly very difficult to reverse for the number of reasons. For example, the absence of the need to replace old banknotes and coins. And as a result, the introduction of a new domestic CBDC can be used as a preventative measure of sorts. And I think this challenge of digital dollarization by other CBDCs is particularly strong in the Pacific because of the continual withdrawal of correspondent banking relationships over the years. And it has been among the largest in the world. Between 2011 and 2019, the correspondent banking relationships in the region fell substantially, about 50% in Melanesia and 44% in Polynesia. And even though the rate has stabilized around the world globally in general, in the Pacific, it has risen recently. And so a number of countries in the region are facing the risk of complete exclusion from the global financial system. And the loss of correspondent banking relationships would have major implications for the national economy, reduce the ability to receive donor payments, grants, limiting foreign exchange, trading profits, which are for some of the banks the largest source of income. And so it could be, and loss of cross-border payment channels can be particularly damaging for countries that rely on the foreign remittance flow, such as Tonga. And I also think that Pacific Island countries may be more vulnerable to digital dollarization via CBDCs coming from the relevant central banks, jurisdictions to which they have been historically more closely connected. Southern Pacific more closely connected to Australia, New Zealand, North Pacific to the United States. And another issue to keep in mind is the continuing expansion of cryptocurrencies, not just Bitcoin, but stablecoin and stablecoin markets. And that's another pressure point for Pacific Island country economies, especially if we consider that cryptocurrencies evolve over time and they tend to reduce known deficiencies, such as high energy consumption. These issues will be resolved over time, or reserve management arrangements and stable coins. And we've had an example of El Salvador, which accepted Bitcoin as legal tender, quite surprisingly. I don't suspect or suggest that this will be the case with the Pacific Island countries, but who knows? This is also a pressure point, in my view. And since I'm running out of time, I surprisingly have a lot more content to go through. I'd like to switch directly, not to design principles and other technical aspects, but to my case studies. And the one I alluded to is the Marshall Islands. The Marshall Islands CBDC, I think, is a good illustration of the problem of cost recovery. So what happens if a CBDC is outsourced to a software developer? And in 2018, the Republic of Marshall Islands passed legislation whereby there would be a total issue of 24 million units of SOV, or SOV, as a sovereign cryptocurrency. And according to that legislation, as we can see, essentially 50% of the entire issue would go to a software developer. This makes me conclude that for the software developer, which definitely wasn't planning to work for free, this is essentially an investment project of sorts. And then the question arises as to whether CBDCs, the development of the CBDCs, should be run by profit-seeking individuals or run in the public interest in the first place. Then I have an example of European, why am I saying European instead of Eastern Caribbean Central Bank and Eastern Caribbean Currency Union, ECCB, Dcash, which was launched more than a year ago, but then at the beginning of this year, in January, there was a major systemic disruption caused essentially by an expiration of an identity certificate, which took the entire system offline until mid-March. So that's almost 2 months. Something to keep in mind. And also the Bahamian cent dollar is probably a good example of a robust initiative that builds not only on the technical foundations, but also incorporates the different steps to increase the accessibility of financial services, and also in investing in programs to enhance financial literacy. And it's probably good a model to think of in terms of a systemic approach. And so I'm concluding now with the final slide. And of course, there's so much. So hopefully, we'll be able to talk more in the questions and answers. But there's an elephant in the room. Not every Pacific Island country has a central bank in the first place. I think there's just Fiji, PNG, Samoa, Solomon Islands, Timor, Tonga, and Vanuatu. For many of those countries, a CBDC is likely to be a significant change to a payments framework. especially considering countries like Timor-Leste, where e-money issues or e-money systems were launched basically slightly more than a year ago. And to transition from e-money using USSD all the way to CBDC relying, say, on a smartphone connectivity is a major gap, is a major jump that's to do. And as I mentioned, I think that there's a lot of countries are under significant external pressures, such as the digitalization, cessation of correspondent banking. And interestingly, in January 2022, Japanese fintech was announced its appointment to conduct a feasibility study to consider developing a CBDC project in Oceania. It will focus on Fiji, Solomon Islands, Tonga, and Vanuatu. So keep an eye on that if you're following this space. Yes, and going forward, I think a very important part of the development of CBDC is to make use of regional collaboration, existing engagements in the sector, which are many, and competition is going to be a major challenge because of the low number of competing payment system providers, the low number of commercial banks, and e-money providers. It could be just one, such as in Timor-Leste. And importantly, the rollout of a CBDC in Pacific Island countries, I think, should be accompanied by activities promoting consumer understanding of the new technology to generate demand and promote trust in the central bank and the technology underlying the CBDC. I'm sorry, Jason, I think I've gone slightly over time, so I'm finishing not having covered a bunch of material, probably way too much.
That's totally fine, Anton. I mean, it's such a big topic and there's so many different angles. I would just note for those who are attending that I did post up a link to your SSRN page. And so this presentation is linked to a paper that Anton published. Oh, there we go. You've got the link in the slides as well. And Anton, will it be fine to distribute the slides to the attendees as well? Are you happy to do that?
Absolutely.
Wonderful. So if you are interested in reading some more detail on these issues, you can have a look at Anton's paper. I'll now pass over to Urszula. Would you like to give us a local practitioner's view on some of these issues?
Thanks very much, Jason, and what a pleasure to be here. Sydney University is my alma mater, so wonderful to join you tonight. I'd have to thank, of course, Dr. Didenko for that formidable presentation and, trying to capture all the possible issues in relation to CBDCs in that session is nigh impossible, but you did a great job. My next sort of 5-10 minutes is really to provide the perspective that I've had in working on CBDC projects with governments and transnational, so bridges between CBDCs, but also some work that I've done for the World Bank in dealing and supporting jurisdictions in the Pacific Islands with their digital economy development, as well as in the broader Asian region. And I think that there's a few things that I wanted to mention from that practical perspective that I've seen that really support a lot and echo a lot of the points that Dr. Didenko made. And the first of that is in relation to the Pacific Islands and other emerging economies, you really see this dichotomy between the challenges and opportunities that they face. Many of the challenges Dr. Didenko mentioned were absolutely on point, and it can be very easy to underestimate how big an impact they can have. So if we look at, for example, walking down the street, as I did in the Solomon Islands, getting internet access is really a big surprising challenge. You might say it's not been altogether that long since we all had that sort of much more manual connectivity to the internet, but it can really strike you that it's such a barrier when you're experiencing it firsthand, where you're trying to catch that little bit of internet that you've got from one little hotspot and really not having the same sort of experience of connectivity to ICT infrastructure that we all know and love in more advanced economies. Even the Tonga volcano explosion signaled just how weak, that weak link of infrastructure and how powerful that can be in relation to connectivity. The other thing in relation to the challenges faced in emerging markets can be commercial. So when you're looking at an archipelago, you can't have the same sort of branch network and sort of actual physical locations, services, contact And so you're really relying on a very different sort of network to be able to move money around, which really supports the proposition for digitalizing payments. But also some of the challenges that we've seen haven't actually been legal or technical. And to give you an example, in the Philippines, one of the hurdles that we had around digital economy development wasn't so much that the law wasn't there, or frankly that the technology wasn't there. It's one of the most active, internet focused, strong mobile penetration, places in the world. But it was actually traditional paper-based processes, receipting, bureaucratic functions that made it very difficult to really mobilize digital payments. And so some of those legacy issues can be very difficult to break. And so the top-down, approach often from governments can really start to spur digital economy development and the adoption of more innovative approaches to payments. On the opportunities side, though, what I see is a real sense that there's an opportunity to leapfrog traditional phases of developments to tie into the digital economy and other initiatives that a lot of these islands are exploring or indeed have launched. And it can come as a surprise to many, let's say in the more developed world, that many of these jurisdictions have very advanced digital identity schemes. They've got great infrastructure in certain cases. And so they're already the sort of hooks, the ingredients for having a really great, strong digital economy. And it can be a really strong enabler. And so, some of us might be thinking the use of CBDCs to be doing fast transactions for securities. For a lot of people who are living in outlying islands, perhaps it's the difference between operating a small, tourist destination and something that they're able to connect with people from around the world and really galvanize a small business that is really transformational from a development perspective. And so many of these developments have this outsized impact on markets like this. On the CBDC side, I also see some kind of key things that really are important from these economies' perspectives, and frankly, from any economy's perspective. Balancing the risk, balancing the opportunity, and also considering the why behind undertaking a project like this. And again, Dr. Didenko had some great examples where just the cost involved, the complexity, the systemic risk that was posed really didn't give the upside that perhaps was intended. And so what I want to touch on just briefly is some of the alternatives or other perspectives that we've seen. Some of them range from just sticking with cash, which is really, the few these days. On the other end of the spectrum, we've got jurisdictions like El Salvador going full crypto, but really the rest we see in the middle. And the middle zone is really about renovating payments infrastructure, really looking at the way in which payments flow today and what model best suits them. So a case in point was Cambodia with the Bakong project, which some people refer to as a quasi-CBDC, but was really about looking at wallet infrastructure that could tie into other systems, including existing bank accounts. So there, the government really focused on building, enabling infrastructure to support digital payments. So that is an element of looking at the field. Stablecoins is another good example, which is an interesting counterpoint to CBDCs, because often it's a real opportunity to provide for that sort of synthetic model of using commercial bank money represented in digital form. But that stablecoin model, lots of information, lots of focus in relation to creating good regulatory models for stablecoins. So finally, I just wanted to mention some of the other key sort of flow-on impacts of adopting either a CBDC or a more mature digital payment infrastructure. And that includes things like programming social payments. I see that a lot. It also includes the delivery of services like telehealth that also uses digital infrastructure. But it can also be sort of leveraging the very best of what's going on in digital economy development. And that includes things like bringing art and traditional practices into the digital economy through things like NFTs, And you may love or detest what's going on in the crypto world, but there's some really interesting opportunities for developing markets to really seize what's going on in that innovative space and look at how it might apply to their specific use cases and environments as well. And the other element is things like decentralized finance. And decentralized finance, in another term, many years ago called peer-to-peer, but perhaps, with a number more participants involved. But a lot of emerging economies looking at how do we bring the best of what's going on in that innovative space to our local markets. And then finally, because it's a project we're working on right now, is the importance of interoperability between CBDCs and payment networks. And that's where projects like mBridge, which I'm involved, and other types of cross-border trades are so important to factor into the picture. So I'll leave it there. Thank you.
Wonderful. Thanks so much. I kind of feel like I'm drinking from a fire hose here. There's so many different ideas and so much happening that it's hard to keep across that. So thanks you to both of you for sharing with us some of your experiences. So I just wanted to put a call out if anyone has any questions who's on the line. There was a question posted up earlier about which countries are using the CBDC as legal tender, but we've already talked about that, so that one's been answered. Did anyone else have any other questions? If you wanted to post those in the Q&A box. Okay, so I'm not seeing any questions come through there. So I might just ask a question. Anton, this would seem to be fairly fertile ground from an academic perspective to go off to someone like, the trade department at the Commonwealth. Is it Austrade, I think they're called, and perhaps do some work with some of these jurisdictions to help them address some of these issues. Is that something that UNSW has been looking at? Is that something that you and your team at UNSW are interested in?
There was a lot of interest, certainly. We have been working a lot with the Pacific Island countries over the recent years. We facilitated the development of the world first regional regulatory sandbox, for example, for fintech, and now the relevant countries. There was a project that's facilitated by AFI, Alliance for Financial Inclusion, and now there's sort of ongoing development to develop individual sandboxes in the region. There's also work. And slightly over a year ago, we were approached by the Asian Development Bank, which requested a report, a preliminary study concerning the opportunities and challenges of a CBDC in the region. So we certainly see a lot of interest, early stages of interest, and it was quite interesting for me to see what followed from some of those discussions. And then one of those developments, quite interestingly, was the announcement at the beginning of this year that a Japanese firm, which I will not name, I don't want to engage in promotion, but it's a fintech firm that I think was affiliated with the Bakong project that Urszula mentioned, announced that it would be working on an initial study to evaluate the potential of technically building a CBDC in the region, but they will also be considering not just the CBDC per se, but also developing the entire or improving the entire infrastructure in the region. So again, building on the Bakong experience, not just the CBDC per se. It's quite interesting. So it seems like countries like Japan are particularly linked to the Asian Development Bank are assisting the region and their own countries. And also, we had some informal talks with officials for a number of countries, including the United States, considering evaluating, looking into the potential of a CBDC in the region, possibly in order to determine their steps. So we certainly see a lot of interest from developing institutions, individual developers, and even government officials dealing with these matters.
And I mean, this is an area where, our federal government, and I should say we've got a lot of people on the line who are in various countries around the Asia Pacific and also in the EU. So it's great that we've got that broad audience, but this is certainly something that, you know, the Australian federal government has talked a lot about, wanting universities to get out there and to be working on impactful projects. And so it's great to see that, you know, some of the work that you're doing over there at UNSW is being recognised in that way. And, you know, I would certainly encourage those of you who are working for institutions like regional development banks to, you know, reach out to universities, because we've got some fantastic minds, both with staff and also with students who'd be keen to work on projects that hopefully can push some of these ideas forward. So,
Jason, just to build up on this, as an example of the work we did a couple of years in Timor-Leste, were there on site, and just to illustrate the issues, the kind of issues you deal with on a regular basis. The day I came into the country, actually a couple of weeks before I came to the country, MasterCard ended up operating or being accepted by the payment service providers within the jurisdiction. So you get completely cut off by a bunch of payment options. And around the same time, it was 2018, I believe, the very first e-money service providers was about to launch. It was in discussions with the government, with the central bank. How do you launch? What kind of regulation is going to be developed? And now to talk about CBDC in an economy where e-money regulations were developed just a year or maybe 2 years ago, how big of a jump it is, how much of a challenge it is. It's significant. So some might feel, oh well, CBDC are all over the place. China almost finished this, but we're talking about very different economies. Some are least developed countries here in terms of economy size and sophistication. It's very important to bear this in mind. And the region itself is very diverse. As Urszula mentioned, some are quite advanced in terms of available technology. Some require a lot of assistance.
Okay, so we don't have any questions on the Q&A box there, so I think we might finish a couple of minutes early. So on behalf of the audience, thanks very much, Urszula, for giving up your time and sharing your experience. And thanks so much to you, Anton, for sharing with us some of the insights from the paper that you wrote recently and some of the work that you've been doing. So thanks, everyone, for giving up your time. I have posted a link to the Sydney Law School podcast page where you can find the recordings for all of our previous law and business webinars that we've been running over the last 2 years. And also you can sign up for the Sydney Law School events page, and it's a fortnightly newsletter. And when we're having new webinars, not just law and business webinars, but we've also got webinars from our Jurisprudence Centre, from our International Law Centre, our Criminology Centre, that you can be notified of those. And we will have some future law and business webinars coming up, so stay posted for that. So thanks very much for giving up your time, and enjoy the rest of your evening. Thanks, Anton.
Thanks, everyone. Bye-bye.